Hey everyone, Nick Shaheen here looking at Twitter. Not the platform, love the platform, the stock. Today it's having a okay day right now. It had a good day earlier, but yesterday had a good day and this was a follow through. Yesterday got lucky in the chat room, we were chatting about it. A couple of friends pointed it out. Kind of a cup and handle, broke out. We jumped on it right away and got lucky with it. So the point of this video is to know what levels matter and if to book or not to book, kind of the question. So calls bought yesterday were more than double, like 125, 130% by today's high. So this is a daily chart of Twitter. It had a terrible reaction to the earnings. The management gave us reasons to sell it. You know, they had terrible news and they said we have the terrible news probably going on forward. So today at the high, I usually wouldn't have booked it, would have spread it somehow. I could have spread it and gotten all my money back as far as the investment and be long for free. But for a spread, I decided to just get out of it and re-engage if it triggers higher. So why did I get out of it? Because massive gap, right? So it's an easy fill. Not so much because I remember making the point when it fell. I said to fill the gap, you know, these gaps are easy to fill usually, but to fill the gap, this gap, management will need to give Wall Street reason. So I made the note then that we would rally to it and fail quite a few times before either the whole market just pushes right through and carries it up, or management says something, or somebody says something that might eliminate some of the problems, fundamental problems that caused it. So let me see if I go down to 240. So this is a 4-hour chart. This was the high poke of that day. Look at the high poke today. So when we got to it, I thought to myself, I'm going to book. This is what I usually say, book and re-engage higher. So ideally, I want to see them go above it, start to use it. But in this case, if they go above it, they're probably going to fill it real quick. But the problem is going above it. So I have the money in the pocket just because I knew to look for levels, not because I was a genius timing thing. But today, intraday, it raced to it and quickly failed. That's the same line right there. I put an alert, in fact. So I didn't put a note in the alert because in my mind I know what it is. It's still fresh. So ideally, the bulls want to stay above 31.40, 45. It's a moving target to retain the reins. So they can go back and hit it again and fail again if they want to, and hit it again as many times until they maintain a higher low and they go above it finally and bust through. So that's how I manage the risk with Twitter. Easy, no complications, nothing fancy, just looking at levels and knowing which levels might be a problem. This is definitely a problem level. And it's not just purely technical, because I remembered the words of what happened on the earnings call as well. Nick signing out.